Wednesday, July 15th, 1:36 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. On the left side are watch lists. The market's still open. The bottom left are the major stock indexes. Got a lot of red, some green. On the top left are the major stock sectors. We have a mixture of red and green as well, too. In the middle, Magnificent 7 plus a few other ones I added. NVIDIA is red. SpaceX is red. Ask yourself, are you bullish or biased? Would you put money in today to buy any of these? Me, I have an idea where I might be trading bearish before the market closes for a bearish swing trade. I just shared that to my higher levels on Patreon. So I have time to make that decision. But the bigger picture is we're going to look at what's occurring. The past few days, we had a big event occur. And today, another big event. The past 2 days, we had the short term, the 2-year, and the long term, the 10-year. U.S. Treasury notes make new lows for the year. Today, we had the short term U.S. Treasury yield make a new high for the year. Top left, 6 months, weekly chart, a new high, higher yields, higher interest rates. Middle chart, top, 2-year, short-term note, U.S. Treasury, new low for the year. So these first two top grids, they have a big impact on the decision the Federal Reserve makes to either leave interest rates unknown or change them, raise them or lower them. But again, typically when you have the yields go higher, the far left, and the middle grid top, the notes go lower, that's more bullish bias, the US dollar. So look at the bottom, the top right chart. Here's the dollar, the low of the year, and it's trending up. Just shy of the high of the year. Well, the bottom left, we have the 10-year yield, very close to the high of the years. The middle grid, we have the 10-year note, also made a new low for the year. And the bottom right, we have the ES S&P 500 futures. It's Wednesday. We still haven't taken out the higher low of last week. Big consolidation up here. On the upside, we have weakness, possible distribution, possible smart money selling. That was the ES. Let's switch this to the cash index. There we are on the cash index. Look at these big red candles, panic selling. The green candles going up on weakness. Give you some insight. The bottom left, the 10-year yield, and the bottom center, the 10-year note. They have an impact on mortgages, auto loans, businesses that are borrowing money, government's debt. Yeah. So again, short term is on the top. That's much more impacted from the policies of the Federal Reserve that have an impact on the overnight lending rates between the banks and the currencies. Or on the bottom, the higher yield, lower note. Again, make mortgage rates, interest rates higher, auto loans, interest rates higher, businesses that want to borrow money, because a lot of businesses borrow money, they're not cash free. Some of them are month to month. Higher interest rates. And also governments, your local government, your federal government, the interest rates are higher. So higher dollar might be good for you if you're going to go live overseas and live off your dollars income, because then it's less expensive in some other countries, but most countries are having inflation. But again, if you have high earning income and if your currency is strong, Then if you go to another country where, again, their income levels are lower and their cost of living lower, it's not cheap. That's kind of disrespectful calling their place cheap. They work hard. It's just that your buying power is stronger because you get paid more. So if the US dollar is strong, then they have less demand to buy US products because they have to raise more dollars. And if the US dollar is strong, then US businesses may have less sales going on. And then there are businesses cut back expenses, labor, cut back on labor. Mm-hmm. And that has an impact on the stock market to make companies' earnings struggle. So on a separate video, I talk about each of these things: currencies, yields, stocks. Majority of stock sectors are weak. Only a few of them are good. But now I showed you some basic information. Gonna tell you what's occurring. So the Federal Reserve, aka called the central bank, other countries call them central banks too, in name. So this year to date, if you're not aware, there's certain schedule mandatory things they got going on. One of them is called the FOMC meeting. When the Federal Reserve meets, they vote to either leave rates alone or change them. And then they put a press release. Well, this month of July, the 29th on Wednesday, 2 p.m., the Fed will vote again to either leave rates unchanged or change them. What are your expectations? Do you think they're going to leave them unchanged or change? The expectations you have, what are you basing it on? Some degenerate in Congress, some degenerate talking head in the media? Again, these are the rest of the ones for this year: September, October, December, and this month. The Federal Reserve is limited what they can do. It's Congress, which is currently controlled by one political party. Congress has two sides, the House and the Senate. Both of them are controlled by one political party. The White House is controlled by that same political party. And the Supreme Court, the majority are the same political party. So you have one political party that right now is the majority of the Supreme Court, Congress, and the White House. There's a lot of legislation. The House, which is the House Speaker, again, is part of that political party, is not bringing up to a vote. They control what goes to the floor to be voted on. Yeah, there's a lot of good bills that are not being brought up. If you want term limits, that bill's sitting in the queue and he refuses to bring up. But they just passed the law for time savings. Instead of changing twice a year, it'll be once a year. So they have time, but they choose what to do. They also don't want to bring up the bill to make sure Congress and staff members and the president can't be doing trading in the financial markets if they're going to serve in the government position. Ethics. So that being said, whatever your opinion is, what you think the Federal Reserve is going to be, the data shows, again, the 29th of July, the current fund rate target 3.50 to 3.75. 87.7% expected to be left unchanged. Again, this could change any day leading up to that event. And 12.3% expect the rates to raise. I've been sharing this for months, how this year has been going. And again, there's an increased odds are that the rates would be raised due to the current economic situation by the degenerates in Congress, the degenerates in the White House. Yep, they're the ones, again, that write the check, which I'll get to you shortly so you can see where I'm referring to this. No better than the other knuckleheads in the other political party. I told you also there's a meeting in September. Well, look here. 51.9% expect the rates to be left unchanged. But look at the increase, 43.9% increase. They expect the rates to raise. October. So the odds of the rates being raised increase even more. Rates, I'm talking about the Federal Reserve raising rates. And the last one for December. They expect to raise rates. Again, these things change throughout the day when the markets are open. But you see where I'm going at. Each of these periods for the rest of this year are showing the odds are more likely the Fed will raise the rates. Why would they do that? Well, because again, you have degenerates in Congress and the White House, past administrations to current administrations that are recklessly spending money. Again, we don't collect enough tax revenue to fund the government. So we borrow money called IOUs. And this is right now, real-time data. The spending of the government, the federal spending, $5.3 trillion the same period last year, October 24th to June 25th, has increased $172 billion. Again, we're spending more money. Congress is doing this, and the president signs the check 3% higher for a $172 billion increase. Are you seeing the return on investment of your spending? Again, you're not paying enough taxes. You're not getting enough benefits. So they have to loan, get money to borrow IOUs. That's spending. So we're carrying a debt, and we're only paying the interest every day, only paying the interest on the debt. The current debt, $39 trillion, and almost another half $500 million increase. If you've been following my videos, I showed when we had just broken the 39 trillion. That wasn't too long ago, only a few months ago. So we almost have another $500 billion added to the U.S. debt, only paying interest. Again, you are not paying enough taxes. So we sell U.S. treasuries to entice people to buy those U.S. treasuries. Who buys those treasuries? I do. Some other people do. Some businesses do. Some governments do. There's different durations. You could do one for 1 month. You could do one for 1 year, 5 year, 30 year. Again, those rates change. And you get interest on them, very low interest. The current mortgage rates, 30-year mortgage. So for the year to date, or the 52-week, here's the high and low. The low was 5.99. The high was 6.85. This is where we stand right now, 6.64. So person that wants to get a mortgage, if they have good credit, they might get that rate. If they want lower, they might have to pay more, pay down. So many variables. 15-year, currently 6.18, even lower. Look at that range. Yep. So the VA one, 30-year. Again, they're all over 5%. And they are very close to what? High. So the point is, I'm kind of being joking when I say high. The mortgages are part of the situation. Interest rates do not determine the price of the house. So regardless if the Fed leaves rates unchanged or changes them, regardless if the mortgage raises rates or lowers rates, I'm talking about the interest rates, or if Congress gets spending in line with cutting spending, cutting the deficit, the value of the house is not on a stock exchange. It's not the best pricing. So that being said, the rates are not determining where you have some degenerate politicians who say lower rates are going to lower the value of the house. Nope, supply and demand. And the market will decide. That's the same with the stock market. Again, if you don't want to pay a price for a stock, you just don't make the trade. There's other stocks that you could trade on, other cryptos, other futures. If that seller doesn't want to accept your house price, they just won't accept the deal. But again, it's not the best financial exchange for houses the way it's priced. The broker has an incentive for you to sell the house higher, so they make more commission. But again, you'll be paying the mortgage. Credit card rates, almost 20%. That's high. Remember I told you, mortgages, auto loans, businesses, governments, as these yields are going higher, it's a more of a burden for them. Yeah, that's a high. If you carry a balance, I don't know what your balance is, but this is the average right now. That's extremely high. More people carrying balances on their credit card, or anybody carrying credit card balance, then they're just making a payment on interest. That's less money they have to spend somewhere else. Debt, not good. This is the regulatory agency for banks in the United States. You may not be aware, but in the United States, we had several banks that failed. So this one here, Chicago, Illinois. Again, each bank has a different number of branches. You might have a bank that has one branch. You might have a bank that has 5 branches, 50 branches, or hundreds of branches, Example, let's say Bank of America. There are many, many states. Wells Fargo, many, many states. And then you got some banks that are just a few in one state. You can look at each one individually. But again, this bank in Chicago, January 30th, it failed. The federal FDIC came and took it over because they failed. The investors in the bank lose. They don't have control. Their investment is gone. The customers are protected because it's insured. But again, the investors that started that bank, they're gone. They lost. Here's another one. This was in Georgia, May 1st. And the most recent one was this month in the state of Indiana. Bank shut down. So again, some people want to start banks. Some people are successful and some people lose. These people lost. The investors in those banks. Some of these banks, the government will maintain control of them until they find somebody else who wants to buy them, mergers and acquisitions. So some of these are auctioned off, and then the government clears their books. This government agency, the FDIC, clears their books, and another bank acquires them. Credit unions. I have quite a few of them. Yep, see, this year, January 16th, this one was in Arkansas. January 22nd, this one was in California, Beverly Hills. April 1st, Pennsylvania. April 30th, Arkansas. May, Mississippi. June, California. And this month, July 10th, Missouri. Again, a lot of these failed. Some of them merged. See, different things occur. But the point is, the increase is going up. More financial institutions. Financial institutions are very broad. Financial institutions include banks, credit cards, lenders, credit unions, insurance companies. But again, you see the increase, more and more of them are failing. There's a reason behind that. Again, a lot of people are now going from 2 jobs to working 3 jobs to make a living. If you're not aware, Congress has a responsibility, a job. Most of them are degenerates, and they just do the minimum and get paid when they're not doing it. Well, we have an event coming very soon. Wednesday, September 30th, Congress has to either pass this or fail. Basically, it's called a CR. It's a continuing resolution where they fund the government to operate or we shut down. Remember, we shut down a few times. So this has to be done before midnight, I call it, Wednesday, September 30th. Congress faces the upcoming deadline to pass a full year appropriations for fiscal year 2027, or they need to enact a continuing resolution. They've done that a few times. Remember, they broke it up last year into smaller parts. If neither is achieved before the deadline, the government will shut down. Again, I told you, there's one political party that controls both sides of the houses, the Senate, the House, both sides of Congress, the House and the Senate. Same party controls the White House, same party controls the Supreme Court. But they had time to vote and pass daylight savings time, but not to take care of this, kicking it down the road and also not to make term limits, past term limits for Congress members and judges, federal judges, a bunch of other things. Yeah. Well, it's going to get ugly because this year, November 30th, is elections. So whatever they do between now and election day, more people are situation aware. So what do you think they're going to do about that funding? You think they're going to completely pass it or kick it down the road and extend it for a few months? I say that is because the new Congress will start January 2027. And if you looked at the past CRs and several other things they've done, they would pass just enough to go a few weeks past the new Congress. So their hands are clean and they get their pension and walk away or continue doing their investments in the financial markets. Again, I'm showing you here the yields, new highs for the year. The notes, new lows for the year. Very broad, very good insight. The situation aware. Thank you as always spending just a little time with me. That's it for the video. Thank you for watching.